I'm Joe Jaquint, CEO of the Patriot Trading Group. Our toll-free number, 800-951-0592. The website at allamericangold.com. And welcome to Friday, wherever it is that you may be tuning in. You know, the old terrestrial radio on your laptops, your cell phones, you podcasters. Maybe you're catching us on YouTube, wherever it is. Subscribe to all our stuff. That way you won't miss a thing. Jackson Hole, Wyoming. Yeah, the rich guys planning our demise. Jay Powell was talking this morning and said a bunch of nonsense. Half a point, 3/4 of a point, whatever it may be. The Dow down 500. The Nasdaq's down 300. The S&P's down almost 100. Listen, we've had Joey on. We've been telling you, especially these 401ks, there's no reason to take big losses. Make sure you've got the right allocation. Reach out to Joey, 602-909-9048. And just, listen, no cost. Hey, protect yourself. We know what's coming. Rates are going a lot higher than where they are today. Inflation's out of control. Huge warnings today about what power bills are going to look like this winter. Talks of, super spikes in natural gas and all the rest. Listen, Europe already has it. It's most likely coming here. So make sure your portfolios are protected. But Jason, Jay Powell hinting that there's a good chance it could be 3/4 of a point at the next Fed rate hike.
Well, and that would mean, let's face it, because the last number was down about a half point. The inflation number was better, and for him to go instead of a half point to a 3/4 point means he's got some sort of idea that inflation is still very strong. So, it's another 3/4 point, Joe.
Yeah, listen. They got lucky. And again, we had more inflation data out, their favorite numbers. The headline number was down a little bit. The core was up 1/10. And that's really the problem. The problem is, and remember the last jobs number, how hot the labor cost number was. When you think about business, okay, there's two major expenses for most businesses out there. And that's going to be, hey, your facility, right? Hey, I own a building, I own some land, or I've got to rent a place, right? I'm making a mortgage payment or a rent payment, and labor. I mean, those by far are your two biggest expenses. And with labor running that hot, I was telling everyone, listen, rates are going to be higher. He says that the size of rate hikes, totally data dependent. So this has been the line forever. What happened? Where was the data dependency, Jason, when inflation was skyrocketing and they were, it's transitory. Apparently it wasn't data dependent then, but now it is. Now it is.
Well, and I believe, Joe, that they think the CPI numbers will go down in 2023 because the big 6s and 7% year over year was started in 2022. For the year over year 2021. So I think in their minds that they get like a 5% next year, they can start claiming that they're on top of it, Joe. I don't know if it'll cool down with these 1/4 and 3/4 and half point rises that they're doing, but we'll have to see in early 2023 that'll be a real test for what they're doing, because if year over year is only 5% or 4%, that's still 11, 12, 13% over 2 years ago. How much did they really cure, right?
How much did they really cure? Likely to require restrictive policy for some time. So kind of foreshadowing, hey, whenever we stop raising rates, it's going to be a while. And at least right now, hey, we're letting you know we don't intend to go back to zero. We'll see if that plays out. History cautions against prematurely loosening policy. So, again, Jay Powell trying to be a little tough here. We know he's not, but, obviously what they say and what they do are two different things. He can say this till the cows come home. His track record speaks for itself. He's a day late and a dollar short at all times. Inflation has just about everyone's attention right now, he said. So apparently, I guess that's positive. Hey, apparently we finally got Jay Powell's attention. Highlights a particular risk. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched.
Yeah.
I think we're already there. Right?
One of those Fed chiefs just a couple months ago said he was expecting 6.5%, 7% year over year for next June. Remember that, Joe? So
yeah, that was the New York Fed. Yeah. So that's that wasn't when New York Fed. They carry a little more weight because they oversee Wall Street. So when the New York Fed says, because you don't get a lot of comments out of New York, you get, Chicago, St. Louis, Minneapolis, right? You get these other Fed governors in areas that maybe aren't quite as important. But that one carries a lot of weight. So really as delivered, I think. He wanted to come out, and be tough. And say all the right things about inflation. We'll see what the market, obviously today the Dow's down big, and rightfully so, because if Jay Powell is a man of his word this time around, rates, to Jason's point, look like they're going to be considerably higher. Forget about 3, or are we talking 5 or 6 on a Fed's funds rate? And at that level, it's going to be very difficult for the paper assets, Jason.
Well, I think it's why Joe Biden and the Fed, they're wanting you to look at the big fight that like they're fighting a dragon that's called inflation, but they don't want to see the word recession. They don't want to talk about that. Let's just change the meaning on that one, right, Joe? Don't look over there, right?
Yeah. What? Everything's fine. That's not what recession means anymore. 800-951-0592. So the big Jackson Hole speech is out and done. Everything's down today. Gold's down 20. Silver's down 25 cents. The entire stock market getting hit pretty hard this morning. Bond yields are up just a little bit. They're going much higher. But again, we're seeing now this 10-year note squarely above 3%. Looks like before the end of the year we're going to have that number be over 4%, and how high does it go afterwards? But other things happening. The other day California announced we will not allow any new car sales to be gas powered starting in 2035, which basically means. Because car makers, listen, they're not going to build, here's our California cars and here's everything else. Everything's going to be, I think that's probably the gauntlet now, all electric by then. And man, are these electric car prices going out of control. I mean, Tesla, they've raised prices, 3 times this year? Ford just announced it, the Mustang Mach-E, raised it another $8,000. I mean, these aren't little price increases. These are big ones. Tesla, I think they've raised the price of a Tesla by over $10,000 this year. Ford saying significant material cost increases, continued supply chain restraints. They're now saying that the stripped down, the cheap Mach-E Mustang will now cost you pretty much $50,000 is the base level, Jason. That's incredible when you think about it. Hey, I'm going to buy the cheap one. Yeah, it's going to be $50,000. And why do I get the feeling that next year these prices are going to go even higher than that?
Everything that builds a car is more expensive, and it is a vehicle that uses energy. So if you're constricting energy use across the planet, it doesn't matter how you're getting the electricity in the car; it's going to cost more. They're delving out less energy, Joe. So it doesn't matter if it's an electric car or a gas car; it's going to be more expensive no matter what you drive.
Yeah, we're going to find out the true cost of this going green. I think people are going to be very, very, very surprised. Just what they need, like the lithium and all the other components, as they all go electric, is going to be overwhelming. It was one thing when Tesla was making, 200,000-300,000 cars, but it was just them, right? And a couple of other startups here or there. Now you're talking about, hey, we're going to make, 40 million electric cars around the world, these prices. But again, I think they knew this. Yesterday we talked about this. There's no reason, none, for gas to be $4. There's no reason that natural gas is almost $10. And they're talking about a super spike over the winter, right? There's no reason for these things. We've got plenty of oil. We've got more natural gas. Natural gas. It's incredible how much there is out there. But Jason, this was deliberately done. Create these shortages. Don't invest in these things because we want to take you over here. This is why I said yesterday, listen, these billionaires in Jackson Hole, they're setting our fate up for us, Jason.
The fact that they're talking at all means that it's not good for the average guy. They're talking because they're fortifying their position. So, if it's energy guys, they're going to talk amongst each other about how they can collude. This is all cartel. They all learned it from the central bank cartel. Now, all the corporate cartels that run energy or run government or run education, they're all fortifying their positions every time they meet. It's not that they're it's not like a movie where it's like the evil genius is going to kill people. It's all about control and financial burden that we bear, so that we stay down here and they stay up there. That Bannon speech that we play once in a while, he just went off on the Federal Reserve. He did make one solid point. We all know that the top 0.5% now make more money than the bottom 90%, but that actually did happen just since the 2008 housing crash. The last 10 years is when that actually completely flipped. The bottom 96% still did earn more. It wasn't a lot more, but they earned more, and that flipped in the last 10 years, Joe. And this is not going to get better. If that's not going to get better, that means it's more heavily weighted towards the top 0.5%. I'm not a big complainer about people getting rich. But when they use government to enrich themselves, that's the problem, Joe. And it makes it's no wonder why 87,000 new IRS agents are showing up, because they need the police force to enforce this thing.
Yeah, and again, that whole IRS situation getting worse and worse as we learn more about it. This is, when you're talking about one of the largest expansions of government ever, that's off the charts. The expansion of the domestic police state from the federal government, the largest in history. The Biden administration's trying to, oh no, we're not doing that. Yesterday the head of the IRS, oh no, it's fake news that we're arming IRS agents. Listen. That was what you put on the job description, so I don't know how it's fake news. This is absolutely what is going to happen. Anybody who believes that they're hiring 87,000 IRS agents and they're not going to be targeting most of their audits for people making under $250,000, you just don't know reality. You just don't want to live in reality, because they've already said it. Listen, over 90% of all the audits the IRS does is people making under $250,000. And guess what? They already said the percentages aren't going to change. So what does that mean? Well, we're going to get more. It's incredible.
That's exactly right, Joe. It's exactly right. I ran over some numbers when you were on your vacation that showed the numbers right there in your face, that there's more money to be had taxing the bottom 95% than the top 5%. And I ran over these numbers. It was a video. I used the straight information from Joe Brown. You've heard me play those, but he laid it out right there. He's like, this is not a conspiracy. This isn't just a theory. This is where the money is. It's sitting there, especially in the we'll say the top 45, not the top 5%, but the next 45%. That's where all the money really is. The bottom 50% also has some money they're going to take, Joe.
Yeah, and again, this is just facts. I'm sorry, but this is the reality. They carved out, and like they always do, right? They carved out a loophole for Wall Street, right? Which Jason's already said, hey, listen, the top 5%, listen, they've got great tax guys, right? They probably know the tax code better than the IRS knows the tax code. There's so many loopholes. You're not getting money there. It's not where you're going to get the money. Right? They're going to get the money on the people, like Jason said, probably the next 45%, right? So take out the first 5, the from 95 to about 50%, on we're talking about wage earners, right? The next group of wage earners, that's where the vast majority of it's going to be.
Absolutely, Joe. I was yesterday on Faking the Truth. I was playing John McAfee, the guy that made up some software and got really, really rich, and then suddenly he moved to Belize and tried to get away from America. Didn't like the system we have in place, and suddenly the IRS was coming after him, right, Joe? This is always the thing. Well, we need to arrest him. He evaded taxes. And he had all this crazy stuff going on. Then he had to come back to America and to resolving some of his situation and then running for president. But when you listen to him talk, and we played a few pieces yesterday, Joe, the guy was talking about, hey, this cryptocurrency thing's coming, and they don't know what to do about it. He's like, you remember when last year? Last year's when he supposedly died. And guess what happened last year? Remember, we vaguely reported this, Joe, see if you can remember this, where suddenly billions of dollars of Bitcoin just disappeared. Nobody knew where it went. Remember that? That was also the same. I
remember him dying. It was a weird...
In a Spanish prison. That's right.
Yeah,
but
weird situation.
What's funny is at the time that he died, also is when all of that Bitcoin just magically disappeared. He was heavily invested in. And suddenly a bunch of other IRS tax cheats, so-called, were being arrested and put in prison, and there was a large IRS sort of scheme going on, and suddenly he's dead. And the IRS were definitely after him. So it's kind of interesting as learning from a tech guy and a Bitcoin guy and an anti-government guy, that suddenly here we are in 2022 and we need 87,000 more of these guys. Isn't that interesting?
Yeah, exactly. Yeah, right. Just coincidentally, Bitcoin having a tough day. As well. Apparently, Bitcoin doesn't like higher rates either. This just coming out, housing has been obviously rough. But the largest landlord in the United States, Blackstone, they do it through Home Partners of America. They are the largest residential. They're also the largest commercial landlord in the United States, announced this morning that they are going to stop buying homes in the majority of the cities that they operate in, and saying that the market has become overheated, and that starting September 1st, they are pausing on applications and property submissions, and then also going to add to that another group of cities on October 1st. So they're going to do it in 2 phases. Starting next week, they're going to stop buying in 38 cities. A month later, they're going to add another 10 more cities to that. So, Jason, the largest player in the home buying market is taking a pause.
Yeah, well, I mean, if they see cheaper home prices coming in somewhere in the future, then, of course, why not sit on the cash and wait for that buying opportunity to come, Joe?
Yeah, so that's going to be something that's going to be interesting. How slow does housing get if these guys are going to step away? But to Jason's point, listen, this is BlackRock or Blackstone, whatever, one of the blacks. These guys already know where the market's going to be, and obviously what they're thinking is, hey, we're going to see a big pullback, and we're going to keep the powder dry and wait till our better time to swoop in and buy up a bunch of properties again. So here's the good news. If you're looking at, hey, I want to buy a house, maybe things are going to fall a little more than we think. The problem is, as mortgage rates continue to rise, your payment may not even get any better, Jason.
Yeah, that's one of those things. And how long will the rates stay high? We could be looking at something when the rates go up to whatever level they end up at. They may not come down very much or not at all, and that could last maybe years. We have no idea where this is exactly headed. But if the New York Fed is saying inflation at 6 to 7% in June of next year, that means these rate hikes are going to stay here. So buying a house now, maybe, if you don't want to wait 2, 3, 4, 5 years, or who knows, Joe, who knows exactly how this thing plays out. yeah, you may want to buy now because the rates are going up. They're going to keep going up.
And I think you hit it on the head. Normally what happens in a market like that, this is what normally happens. People do nothing because they don't know. Right? They're so unsure. Do I buy today? Well, mortgage rates are only at 5%. Or do I wait and hope that prices go down? But it's one of those things where, at least for housing, as the rates continue to rise, these payments, I don't know. It's going to be hard to say.
You said something just a moment ago. The big buyer is slowing down on buying. Well, that means they'll be slower building. It's almost like they're manipulating the amount of homes being built to keep the price at a certain level. So these prices may not dip nearly as much as a lot of these catastrophists are saying. All you have to do to keep housing prices up is stop building.
I agree with that. I don't know. I think the best scenario for housing is prices fall enough that it offsets the increase in mortgage rates, right? So that payment doesn't get any worse as the prices are falling. I think that's probably the best case for housing. We'll be back right after the break. 800-951-0592, Patriot Radio News Hour, Joe and Jason. And yesterday I told you we're going to talk about the storage in the gold and silver markets. Primarily, we're talking about London, and we're talking about the COMEX here in the U.S. But London, the London Bullion Market Association, if you will, might as well just call it what is J.P. Morgan, and they are having an issue when it comes to storage. They're saying that storage levels, available levels, continue to deplete rapidly. They're saying that China has been on a huge buying spree. Now, of course, China doesn't say that, hey, we're officially buying gold, right? They've said that they've had about 2,000 tons of gold, and it's been that way, Jason, for the last 7 or 8 years. But when you look at what they're bringing into the country, it really is getting to be at levels that they have not seen before. I have a hard time. Now, it could be is that China's got over 1 billion people. Their citizens buy a lot of gold, but it looks like China is back in a major way into these gold markets. Gold stock levels are at the lowest they've been, especially. So one of the things that London does and COMEX does, your paper gold, your paper silver, the ETFs, they pretend like that's part of their storage, even though it really isn't, right? That's private people's gold, but they say, oh, no, well, we've got this available. And I guess what they're saying is, and remember how these paper contracts work. It's really worth noting. At any time, they can just say you're out. And here's your cash settlement. And I think that's what the London Market Exchange is saying. Well, if we need to, we can always just take the gold or the silver out of the paper ETFs. But something, especially when it comes to silver, and this is a little frustrating because you look at silver today, just below $19. Are you kidding me? Premiums skyrocketing, and just in the last year, supply of silver in these vaults has fallen by 182 million ounces. 182 million less ounces. Right now they're saying in silver that there's 31,000 tons of silver in the vaults. The problem is 20 of that 30 is held privately. It is not held by the exchange itself. So when we look at silver right now, Jason, this is the lowest available amount of silver in these vaults going back years.
And that's all predicated whether they're saying exactly what they actually hold. I don't trust anybody nowadays. but going off the numbers, that's extraordinary. That's telling you a story very clearly. And if you go where I'm thinking, it's like, well, and do they even have that much, Joe? Do they really even have that much?
Here's what it tells me. This is what's interesting. Because you take the last couple of months, right? Gold and silver have pulled back. Silver really hasn't even participated in the inflation rally. But here's what's interesting. The amount of outflows this year, double what the number was in 2020. So remember when COVID happened, everybody, remember we were telling people you can't have silver for weeks. We took it off the website. You couldn't even buy it. And they're actually saying, guess what? The outflows from these vaults is twice as big. Obviously, we speculated that we think the Walmarts were buying into the silver markets. But Jason, it really is interesting because silver, the ETFs, money's been flowing in. So that's part of their number, even though they don't really own it. That really means the amount of silver leaving the exchanges, it's even worse than that because they get the benefit of the paper silver in their quote-unquote holdings. So that just means these guys are loading up here, and this is how it always is, right? Oh, well, gold and silver, it's not performing, and yet these guys are buying it like crazy. I think it's just a matter of time. Whenever it is that Jay Powell cries uncle, whenever that moment arises, I think you're going to see a big spike, one of these super spikes where all of a sudden gold and silver just go on a tear for like 90 days and the price seemingly doubles without letting you get in. But these guys, they're already positioned for it.
Billionaires like paper assets, Joe. They don't like storing big, heavy silver. But when you have a billionaire in Texas buying 900,000 silver eagles, it kind of tells you a story, doesn't it? Not about what they're doing or why they're doing it. It's how they're doing it. Hey, they're not doing it in paper silver, Joe. They're doing it in physical silver. When billionaires just typically don't do such things, it should tell everybody else out there what's getting ready to happen to silver. I mean, when J.P. Morgan, back in, 2015, when gold and silver was kind of hitting a low there, bought 55 million ounces of silver, whatever it was, huge amounts, right? And silver's gone up since then. They don't buy this stuff for it to go down, Joe.
Just to give you perspective, China in June, this was a June number, bought 80 metric tons just from Switzerland. Obviously, Switzerland, huge gold refiner, not the country of Switzerland, but China buys most of its gold through Switzerland, through the refineries there. We're talking about $4.6 billion in a single month. And it is the second highest monthly total ever. So this is something worth noting. All of a sudden, there's been a big rush in the vault supply, both in gold and silver, and really pointing to a lot of countries, i.e. country central banks, buying in the gold side, the silver side pointing to a lot of you're talking huge wealth here. We're not talking, hey, I'm going to buy a couple cases of silver eagles. That's not what we're talking about here. Huge level of private investors in the silver market and huge and unprecedented levels of countries buying gold, Jason.
Well, when you look at all of the things going on with inflation and recession getting ready to happen in China, I mean, China's covering up their housing problem and their banking crisis. Where do you put your assets? You're going to put it, you can put it in a stock when things are going to crash, right, Joe? You have to put it in something solid, something that's real, right?
Something you can know where it is, you can feel it, you can touch it, and nobody else. It's not a promise to pay. It's nobody's debt. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. I got a pretty good offer this morning. I've got 100 $5 Liberties. These are AU, so these are what we call almost uncirculated. This is somebody bought them and then put them under their mattress or put them in the dresser. They didn't really get used. Think about $5 Liberties, 1866 to 1907. Probably one of the most common of the gold coins. And to get them in almost uncirculated condition, it's always more expensive, but we got a great deal on them. Listen, they're the same price. Right now, $5 Liberty is $5.75. You can now upgrade that to an AU. You know what? I'll tell you what. I'll do it for $5 less. $5.70. We've got 100 AU $5 Liberties. They're at $570 at 800-951 0592. Wall Street sell-off getting a little worse now, down 600 and growing here. Crude oil, I don't know what happened, but it has turned around. It's the one thing now up today. People commenting about the end of the fall in gasoline. People are talking, again, they're talking stockpiles, saying, hey, there's not enough demand or product to meet demand. They said even if demand for gasoline falls, the supplies are going to fall with it. I'm assuming that's just because there's going to be maintenance needs to be done, things of that nature. These refiners have been running flat out as fast as they can, and they're saying that cuts in oil supply are going to start pushing higher, ripping through to gasoline. So we'll have to see, Jason, but this note just came out, and all of a sudden oil has turned itself around. Bloomberg saying that $100 oil is a lot more likely, saying that the price floor may be in. So there you have it.
It's going to happen. We're heading for the winter. If you're going to not increase, I get, Joe, this is just me. People need to understand that all energy, coal, natural gas, oil, nuclear, it's all one thing really. When it comes down to energy is needed, and if they're not going to increase energy production full scale, we're heading into winter where you use a lot more energy for heat. It's the most expensive time. $100 oil, Joe. I mean, why would it stop there? I don't. It'll go very. If they don't increase production of these energy sources, it'll go way past that very quickly.
Yeah, and again, I think the Fed got lucky. Obviously, listen, nothing goes up in a straight line, and oil and gas, it was due for a pullback. We got that. It's lasted longer than I anticipated, pretty much because I think it's the first time in, 30 or 40 years where there hasn't been a storm in the Gulf in the month of August. So they've gotten a little lucky with it, but I guess what this note is saying is, luck or not, it's not going to get better. It's actually going to get worse. And this is something I've been saying it the whole time. Remember Saudi Arabia last week said, hey, listen, we're just going to cut oil if you're going to come out with these ridiculous paper prices and kind of talking up the markets. But the inventory levels just aren't there, Jason. Even with all the oil releasing from the Strategic Oil Reserve, none of the supplies have grown. They're at the lows. They've been at the lows, and now with the Strategic Oil Reserve at 40-year lows, the picture isn't great. I think it's going to put more pressure on the inflation. I think a lot of people think, hey, this is going to be 50 or 75 basis points, but then maybe they're going to go slower from there. I think what's going to happen in energy may make it worse, in that we're going to get more rate hikes than people think.
Yeah, I think the rates are going up the rest of this year, and it all comes down to the inflation. If the inflation keeps going up, the rates will keep going up. And if they don't want to get on top of it with a very large rate hike, Joe, who knows how long it'll take before the inflation numbers, I guess, top. I think with the last CPI kind of going down a little bit, I think this is what happened in 2021. It's like, okay, the transitory is happening, right? And then it just kept going up. So it just depends on the inflation, Joe. And then we'll see how high those rates continue to go. We could be in the middle of something that a year or two from now will be like, yeah, I wish we had that 6 or 7%. I wish we were down at 4% or 3%, interest rates. We may be sitting at 10%, 15% if things go the wrong way, Joe. We don't know.
Man, here's Bloomberg. The corn crop not looking good. They're saying Iowa, which Iowa, I think Iowa and Indiana, the corn is the crop. Calling the cornfields underwhelming, disappointing. The best word I found was not great. They're saying that the fields that have been toured, the nation's largest corn grower, they said there was a couple of bright spots in the northeast corner of the state, but everywhere else the fields are in worse shape than they were last year, most trailing the historical averages. This is going to really be another blow to food prices, as both corn and soybeans are up more than 2% just today. So, Jason, again, a lot of these inflationary pressures look like and appear like they're actually going to get worse going into the rest of 2022 into 2023, which just means, listen, people just aren't prepared for how high these rates, I think, are really going to have to go. But once again, get the gold put away. AU $5 Liberties at $5.75. Jason and I are coming right back with the final segment. 800-951-0592, AU $5 Liberties at $5.75. Gold's down, coming near the lows here, down about $18 here, $17.40. Silver's down 18 cents. The Dow is down just under, well, it's come back a little bit here, down 550. The S&P's down just under 80 points. The Nasdaq's down 300 points. So everything's just kind of a mess today. Crypto's down almost 1,000, and the bond market, like I said, well, look at this. Now even the 10-year note fell a little bit, 3.02 the yield on the 10-year. Just to give you an idea about crops, corn. Okay, so let's take corn. Probably the most important, corn, soybean, wheat. Right, those are the big three. Corn going back the last 10 years. It's always between $3.50 to $4. We all the way, until through 2020. In 2021, that number jumped to almost $5. Now the number's jumped again. Now we're talking a number over $6, approaching $7. So we're almost at the point where we've got a doubling of the corn price. Soybeans, same kind of a pattern, always between $9 and $10. Now we're talking about soybeans a little better here. We're talking about $14, $15. So about a 40-50% increase in the price of soybeans. And wheat is somewhere around, say $4 to $5. Wheat now approaching $8, so almost a doubling of the wheat price as well, Jason. And this crop report, I guess I should have read more of it. Iowa was a bright spot. They said conditions in Illinois, Nebraska, Minnesota, South Dakota, worse than what was, especially, I guess Nebraska was really bad. But, Jason, not really good news. They did say that soybeans seem to be doing okay. So that's probably the reason why soybeans is only up 50% versus the doubling that we've seen in corn and wheat.
That's correct. And corn, soybean, and wheat, by the way, are about 95% of it is genetically modified in this country. So you're eating genetically modified corn, wheat, and soybean generally. As a rule, there's very little organic. If we were actually just producing it the way we're supposed to be producing it, if it was organic corn, for example, it would be $12 a bushel instead of $8 a bushel. So, anytime you try to cut the price, Joe, well, then you cut the quality, and you pay for it one way or another, right, Joe? So, it's funny because the organic crops, Joe, haven't been going up quite as rapidly because the production's been the same, whereas the GMO crops, they're having to see this inflation mightily hitting them, and It's it's interesting, Joe. $8 a bushel. It used to be $3.50 a bushel in 2020.
Yeah, and this is something where, unfortunately for crops, right? And we know this. That just means 2023 is going to be bad. The first time we can see relief won't be till 2024 because it takes a year, right? I plant it and then I harvest it, and then the winter comes and then we plant and we harvest. So we're not going to get relief. So food prices, which are already skyrocket high, looks like they're going to get. We got no choice. They're going to go higher. And you got to remember too, corn. A lot of the cattle and hogs get fed corn. This is another blow to those markets as well. Patriot Radio News Hour. We're done for the week. God bless everybody.